Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. I'm Forkast's editor-in-chief, Angie. Well, Asia is stepping up as the crypto regulatory ground for the rest of the world, and this week, it is Taiwan's turn to strengthen oversight for the crypto industry. On Tuesday, the country's financial watchdog, the Financial Supervisory Commission, or FSC, published guidelines for virtual asset service providers, aka VASPs, requiring exchange platforms to set up a review mechanism for listing and delisting of all digital assets. Now, firms will also need to custody customer and platform assets separately. Now, SFC also requires foreign VASPs to register locally before serving customers. At the same time, 9 crypto exchanges on the island of Taiwan also jointly announced their plan to establish an industry association mid-October, for which they have set up a working group to speed up the process. Looks like everybody wants to engage here in Taiwan. In other news here, another hack attack, and it's really another gut punch to the industry, this time in a city that just a few months ago seemed ideal for retail consumer traction. We're talking about Hong Kong-based peer-to-peer crypto firm Mixin Network, which was attacked by hackers on September 23rd, who said the losses are not as significant as initially estimated. Still, the figure is pretty huge here. The firm had first said the hack involved assets worth almost $200 million US. The company said on X, the platform formerly known as Twitter, that it had stopped allowing users to deposit and withdraw their funds from the network, but that transfers were not affected. Now, the firm's founder, Feng Xiaodong, said Bitcoin was the core asset stolen, and the company is currently able to compensate affected users up to a maximum of 50%. And the remainder will be paid back in bond tokens, this according to local media. Now, Mixin describes itself as a network for transferring digital assets and claims to have 1 million users. Now, researchers say this is the largest crypto theft so far this year and the second major crypto hack in Hong Kong this month alone. All right, staying in Hong Kong now, the city's Securities and Futures Commission here, or SFC, well, as you can understand, it's been busy, and it said it's going to publish a list of crypto exchange license applicants in the wake of the JPEX probe of fraudulent activity. Now, in a statement, the SFC said the JPEX incident highlights the risks of dealing with unregulated virtual asset trading platforms and the need for proper regulation to maintain market confidence. So far, 12 people have been arrested in the case, including 2 social media influencers. And police have seized more than 8 million Hong Kong dollars in cash, as well as assets worth about 77 million Hong Kong dollars, including real estate and virtual currency. Well, Hong Kong Security Minister Chris Tang said they are looking for JPEX's leader and will hold culprits accountable, as the number of victims rose to over 2,000 now. The alleged fraud case here against crypto platform JPEX is Hong Kong's largest and involves 1.5 billion Hong Kong dollars. That's almost 200 million US dollars in losses. Now, Financial Secretary Paul Chan also said Hong Kong must regulate business ventures tied to the next generation of the internet. Over in the US, in the United States of America, NASDAQ-listed tech firm Microstrategy has become the largest corporate holder of Bitcoin in the world after buying another 5,500 Bitcoins from the period between August to September. The company now owns 158,245 tokens of the world's original cryptocurrency. Of course, we're talking about Bitcoin here. Now, does this pose any concentration risk? Time to ask this week's Forkast IQ's market analyst. We're bringing in Shi. He is the head of trading at Auros, a crypto algorithmic trading and market-making firm. Lee, welcome to the show.
Hi, it's nice to be here.
All right, I want to ask you about this. Okay, Bitcoin price still under the influence of a long bear market. We've been seeing it all year. And yet MicroStrategy keeps adding more to its portfolio. What do you think the strategy is behind all of this, and is concentration risk a concern here?
MicroStrategy has their own strategy, no pun intended. But I think if you look at their own treasury, you'll find that they're also diversified and they have other assets as well. In terms of concentration of the Bitcoin market, their holdings and indeed the holdings of any other single legal entities are still relatively minute. So there's no real appreciable risk of concentration there.
Well, when you take a look at the macro climate, look, we got to talk about bonds here. They've never looked this good since 2009. And the yields are becoming juicier and juicier. And investors are diverting funds away from stocks and Bitcoins into bonds. What do you think is the future of non-yield bearing crypto assets?
We don't think that things will be any different the next time round when the next cycle comes, which if you look at the Fed's own dot plot, that could be as soon as next year. So we're actually building and optimizing right now for when we think the next cycle will be, which it could potentially be as soon as next year. And this knowledge that historically bull runs can start with very little notice. And we are in fact approaching the next Bitcoin halving in the first half of next year. So there's not too much appetite to bet against Bitcoin in particular.
And how do you think the US shutdown and other macros impact crypto here? What's your outlook for October?
Crypto infrastructure is relatively independent from traditional finance. So the shutdown in and of itself will probably not have much impact on crypto trading. What it might mean, though, is that it can move sentiment one way or another for both traditional equities and the crypto industry. BlackRock filed an ETF application, and Grayscale also had a victory in the courts. So right now, that's sort of a big tailwind for the crypto industry, and that narrative will continue to play out over the next 6 months. Even though volatilities are quite low in the market right now, there's a certain fear of going short the market at the moment. Historically, anyone who's shorted Bitcoin has not fared so well unless it's been a very short-term specific play.
Okay, moving to altcoins here, XRP and Solana continue their inflow streak. What's your outlook of altcoins in light of the pending FTX liquidation?
FTX has a number of crypto assets that are to be sold. Now, it's unclear over what time frame they will be sold or when the liquidators decide to make the sales. When the news first came out, coins such as Solana took a hit. They recovered as the market reacted to the event and digested it and realized that the impact was probably not going to be as large as initially thought. XRP, meanwhile, has its own news story that can explain the price movements. It's got its own battle with the SEC. Any movements that we see are relatively small in the grand scheme of things.
Got it. All right, thank you so much for joining in. Really appreciate your insights here. All right, time for a quick break now, but we're going to check in on the NFT markets when we come back. Stay with us. You're watching Forkast IQ.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, welcome back. Let's dive right in. Bitcoin Ordinals, which took the world of NFTs by storm in April, might be getting ready for a little bit of a shakeup here. Ordinals creator Casey Rodarmer is proposing a change to the Ordinals numbering system, along with a replacement for BRC20s called runes, which wouldn't leave as much junk or unspent transaction output on the Bitcoin chain. Now, this has led to significant debate in the community as it could impact the value of existing collectibles. And talking about NFTs value and One of America's longest-running magazines, Rolling Stone, set the mainstream aflutter as it reported that a majority of non-fungible tokens, or NFTs, are worthless. Now, that doesn't really come as a surprise, but the language is a little strong, but it's all about the details, isn't it? Here at Forkast, we believe the worth of this digital asset is tied to its bringing utility to our everyday lives. So it's a little bit more in-depth than that. But there are some points of the report that glossed over a lot of these things. And our data analyst, Yehudah Petscher, is here with more. Of course, we have you to dive in and share more. Yehudah, what did you think of the report?
Well, the cat's out of the bag and NFTs are worthless. Yeah, at least that's what most of the world learned last week when a report came out saying that 95% of NFTs are worthless. And while that report is true, there's a few very important details that were left out. So let me fill in some of those gaps. First, again, yes, true, nearly all NFTs are worthless. That's never been a secret. The blockchain is a public ledger. It's there for anyone to see the value of the NFT market at any point. NFT traders have known about the value of NFTs for quite a while. In fact, between every NFT bull run, the previous run's NFTs become worthless. And I'd wager that that figure is close to that 95% that we saw in these reports. So NFTs trade in a frenzy during short periods of time. Sometimes it's a few weeks. Usually at the start of the calendar year, you have a few months where NFT trading is very, very hot. But between those periods, almost all NFTs, other than those top collections like the Bored Ape Yacht Club and CryptoPunks and a few dozen, maybe a few hundred others, but everything else becomes worthless. They're completely illiquid, you can't sell them, and effectively they're worth zero. And when the next NFT run arrives, almost none of those previous NFTs recover. Instead, it's a whole new crop of NFTs that are minted, and they feed into that frenzy, into that action that we call the NFT casino. That's where buyers buy the new hot project, they sell it, and they repeat that action over and over and over until, well, there's no liquidity left. But would we report that 95% of the stock market is worthless because we're reporting on penny stocks or we're reporting on bankrupt companies? And this is why the Forkast 500 index is so important and why it's telling the real story here. To measure the value of the NFT market, you need to measure the major collections, right? The ones that make up the value of the market. These are the collections that still trade in volume over the months, over the years, and between those cycles, well, they're still trading. And what is the Forkast 500 telling us? Well, it's reflecting that the top 500 collections across blockchains have lost 94% of their value since the peak of the market in 2022. The bubble burst, we still haven't found a floor, and that is the real story. I want to say again this week, like I've said in the past, that value is not the only measure of health and growth in the NFT market. On CryptoSlam.io, we see that last week was the 5th week in a row of declining NFT sales, just $69 million in sales across blockchains. And that keeps us in the range that we saw in May or June 2021. The number of buyers and transactions fluctuates a bit, but still mostly in line with that time in 2021. In fact, maybe a little up. And to me, that's a very significant metric at this stage of the NFT economy's young life. But you should also include that in all of 2020, there was just 18 million in total NFT sales. Only 39,000 unique NFT buyers, 130,000 total NFT transactions. Again, for the entire year. So far this year, 3.9 million unique buyers. That's a 10,000% increase from 2020. And total transactions reflects a 52,000% increase, 68 million transactions this year compared to 130,000 in 2020. It's a completely different story, isn't it? Look, NFTs are not dead. Their value, yeah, it's down tremendously from the peak of that bubble, but a movement was born out of that bubble bursting. It seeded life all around the blockchain, and it's going to take some time for those seeds to grow. NFTs aren't just pictures that people trade for magic internet money called crypto. They're a technical evolution for data, and they, along with the blockchain and crypto, well, they're gonna power nearly every innovation that we see online in the future. If you're coming back to NFTs, they're certainly worth a little of your time to take a second look, but also take your time. NFTs aren't going anywhere. Back to you.
Thanks, Yehudah. Always good to talk to you. All right, appreciate it. Okay, let's take a quick break then, and we're going to dive deep into El Salvador and its president's move to make the country a crypto hub on the other side. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
Welcome back to Forkast IQ. Well, regulatory clarity is possibly the biggest concern in the crypto industry right now. While in the U.S., we are seeing enforcement action by the Securities and Exchange Commission, other jurisdictions, such as Europe and Asian countries like Singapore and Hong Kong, are making the rules clear for the industry. Now, crypto regulations are on the agenda for securities regulators in the Philippines as well. And in an exclusive one-on-one interview during last week's Philippine Blockchain Week, we had Forkast Jenny Ortiz speaking to Philippine SEC Commissioner Kelvin Lee about the agency's stance on cryptocurrencies and other digital assets.
Philippine SEC said earlier this year that you are delaying the release of a crypto regulatory framework, mainly because of the FTX collapse. What's the latest on this?
The goal remains the same. We will have it out for public comment in the next month or so. And then from there, we will see about implementation, whether at the end of the year or Q1 next year, or maybe Q2, depending on feedback on the public. So one message I'd like to get out now to your viewers is that please wait for that draft. When it comes out, please comment and help guide us along on how to move forward with this. We want to make sure that the public has buy-in in relation to this. We want to make sure that the public is ready for this as well. Because admittedly, the way we were setting it up, we want to protect the general public. So certainly it has to go in a certain direction that's a little bit more strict than typical. We want to make sure that it's not too prohibitive that businesses, crypto platforms cannot operate. Now, take note that I'm not saying we will regulate all cryptocurrencies. That's not the direction. What we will do is that we will assess and see which cryptocurrencies or digital assets, as we will call them, would be operating or can be considered as securities. That's what we will regulate.
I know it will still go through assessment process, as you mentioned. But what's your stance on these digital assets?
Cryptocurrencies as a whole, I'm open. We're generally open to it because we understand that this is the next step of the evolution when it comes to the financial system. We get that. So, of course, we want to try to accommodate it subject to appropriate laws. Now, on the point of the NFTs, we will treat the NFTs depending on how they are used. So, if the NFT is going to be used as an art form, then we leave it alone. But if it operates and is trying to be like securities, actively traded, a digital asset, then obviously we'll have to treat it somewhere in a different manner. This is, by the way, the mechanism that the Monetary Authority of Singapore is using. So I thought we would adopt something similar to that. On an unofficial capacity, we didn't come out with regulations for this, but certainly that's how we're looking at treating it once the digital asset offering regulations come out.
So I want to talk about the US and what's happening there. The US SEC basically launched what industry leaders call a crypto crackdown. What's your thought on this? And is there a plan from the Philippine SEC to mirror such a move?
We have very good relations with the US SEC. Just a few weeks ago, the US SEC actually sent a delegation here to train our people on enforcement, and how to treat not only digital assets, but how to treat sustainable finance and different related capital market regulations. So that being said, there are currently no plans to go that direction, meaning crackdown or whatever you're calling it, with the US SEC's direction. That being said, again, we are, however, supportive of the US SEC's position, being a counterpart agency, but we defer to how they do things in their jurisdiction. In the same way, they will defer to us on what we do in our jurisdiction. Now, whether or not we will ever go into a crackdown, that will depend on what happens, of course, with our local players. If there are abuses, then we'll be forced to do that.
One pressing issue in the Philippines right now is the proliferation of crypto scams, basically victimizing Filipinos and even using Filipinos to be part of the scam.
Yes.
It's so bad that it even reached the Senate floor. What are you doing to help protect Filipinos from the scam, crypto scam?
Interestingly enough, a lot of these crypto scams are not generally crypto related, if you know what I mean. A lot of them kasi what they do, they're generally just Ponzi schemes. And then they just use the crypto tag to make it sexier to the public, so that they'll invest. So there's a lot of that. We've conducted raids, we've conducted advisories, we've issued cease and desist orders against different entities already in relation to that. I'd like to strongly emphasize to the public, check with SEC. before you invest, before you do anything in relation to investing your money, digital assets or whatever you call it, please check with SEC so that you'll know whether that company exists or not, whether the company is real or not, or whether the company is even registered in the Philippines. No? So be very, very careful before you invest and check with SEC. Thank you.
All right, over to El Salvador now. Might be called the smallest country in Central America, but it's got big ambitions as far as cryptocurrencies go. It was, after all, the first country in the world to legally accept Bitcoin as currency. 2 years on, how has that move worked out? Forkast's Ayman Ragab finds out.
El Salvador, once dubbed the most dangerous country in the Americas, has changed radically since Nayib Bukele came to power in 2019. Bukele not only drastically reduced the criminality rate that plagued the country for decades, he also made El Salvador the first country in the world to adopt Bitcoin as a legal tender. A large part of the country's gross domestic product, or GDP, is remittances from Salvadorans working abroad, who have to pay heavy transaction fees to send money back home. However, if these transactions were made in Bitcoin instead, they will become instantaneous and free of any middleman fees. By encouraging people to use Bitcoin, the authorities hoped for an increase in banking registrations.
And I think the first is to send a signal that this was going to be the first country that would adopt Bitcoin as legal tender. The second one would obviously be to also allow the country to kind of break free from the international banking system.
El Salvador's Bitcoin law, approved on June 8, 2021, stipulated that the world's first cryptocurrency would be considered as money and be used to pay for goods and services and taxes from September 1, 2021. Businesses are also required to accept any payment made in Bitcoin. All other types of digital assets, such as non-fungible tokens or NFTs, will be considered as securities. Since September 2021, the government has regularly bought Bitcoins. Their target? To buy 1 Bitcoin a day. To date, El Salvador possesses around 2,500 Bitcoins, worth about $65 million as of August 25, 2023. Despite the government's backing, many are not in favor of making Bitcoin legal tender. Thousands of Salvadorans took to the street in September 2021 to protest the move. And in order to push for a wider adoption of Bitcoin by the population, the government created the Chivo Wallet initiative. With this app, people could, in theory, withdraw Bitcoin from Chivo ATMs available all around the country, converting their Bitcoin holdings into US dollars free of charge. In order to get people to use the app, all first-time users were eligible to claim $30 of Bitcoin for free. While this incentive did work to get a large part of the population to download the application, it didn't go further than that. The majority just uninstalled Chivo right after claiming their $30. It was also estimated that between January and May 2022, only 1.65% of remittance transactions were done via Bitcoin. According to a poll by the University Institute of Public Opinion, 21% used it only once and 5% never used it at all. Another problem is digital and financial literacy among Salvadorans. Milton Mendoza, a resident of El Salvador, told Forkast, "Many people do not use it because they do not have the knowledge of technology." But Salvadorans weren't the only one who frowned upon Bitcoin. The International Monetary Fund, or IMF, urged the country to renounce Bitcoin as a legal tender and threatened to stop financing the country. Moody's and S&P downgraded the country from B- to CCC+ rating following the 2022 Bitcoin price crash. While many expected El Salvador to default on some of its debt, it has, however, shown resilience by being able to pay back some of its debt on time.
Credit rating people, and they said, look, a decision to do this seems to be very premature. It's a very volatile currency. That causes us to lose confidence in this country and its economy, and hence we are downgrading its credit rating. Reputationally, the country got affected.
Bukele's administration remains steadfast in its support for the cryptocurrency. The Salvadoran president nurtures his hopes toward a more concentrated but no less ambitious project: the establishment of a techno city on the slopes of a volcano, Bitcoin City.
In order to attract people to say, hey, come here, put your money here, this would involve things like the technical infrastructure, the power infrastructure, the ability to access financial systems, the ability to access perhaps a good legal system.
Even if El Salvador's Bitcoin experiment hasn't reaped the expected rewards, 2 years on from its adoption as a legal tender, the story is certainly not over yet. Ayman Ragab, Forkast.News.
Well, that's a wrap on this week's show. Thanks for tuning in. Remember to like and subscribe. And of course, if you're watching from home or your trading floor or your office, wherever you are, you can always come back to this channel this time next week. I'm Forkast Editor-in-Chief and your host, Angie Lau. It's always a pleasure to spend time with you, and thank you for spending time with us as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ. Get intelligent in Web3.